Hey traders, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, April 21, 2021. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket? Let's get right down to business. So, from a big picture perspective, a few days ago we said we're not really paying attention to that doji candle up there because the volume really didn't support there being a top in place, a full stack. There really wasn't anything supporting the market turn. So therefore, we had a couple of day pullback and the volume was still less than the average daily volume. If you look down here at the bottom, 87 million shares is the average daily volume. This is calculated on a 90-day rolling average. So when you're less than the average, you don't have what I like to call and what is called institutional participation. So if you don't have institutional participation, whether it's in a market being driven up or a market being driven down, it doesn't have conviction. So as such, we had a couple of areas identified. The first one was reached yesterday, but the market hung around the low portion of the area all day long, giving us the impression that there was going to be another leg lower. That's what the pattern on the chart that developed yesterday was signaling for the next move, which was leading into this morning. This is how the day finished yesterday if you look over to the right. However, this is what happened today, and what is exactly that 412.25 area posted on the board as a horizontal trend line? That was the number given out to Inside the Number members early in the morning before the market opened. You'll see it when we get to Inside the Numbers, but that was the zone where if price got above there, that was a recapture for the bulls and they were going to take off to the upside. And the first objective would have been what? Would have been to run a test of the breakdown candle high. We're calling it 414. We talked about all this yesterday. We obviously talked about it this morning inside the numbers. So when you have the numbers and you have the schematic, you can affect opportunity. We'll circle back to the intraday stuff when we do go into inside the numbers. Let's just follow through with what's the daily chart showing us. At present, the daily chart is showing us another recocking of the gun. We talked about that. The trend is your friend until she dumps you. The whole 9 yards. Nothing has changed until it does. That's what we're going with going forward. What would change that scenario? Getting below yesterday's low wouldn't be good for the bull case, at least not from the perspective of what just happened over the last couple of days. Another low, another recocking of the gun with a shallow pullback, and here we are again about to challenge the highs made just last week. Just for kicks, back to the hourly chart for a moment. Now we drew a line at 414. We talked about that. That was the vicinity of the breakdown candle high. We rounded it up to the fat number of 414. Now let's take a look at what happened once they got there. Because once they get to these important numbers or important spots, we're likely to see a reaction in the other direction. How we gauge the market, and this is kind of stuff you want to write down. The way we gauge the market is when they get to these important spots, what do? Do they hang around for a cup of coffee? That's building energy to go to another important spot. Or do they turn around and go back in the other direction, having been rejected? We don't know which one it's going to be before we get there, but having the important spot is 2/3 of the battle, isn't it? 5-minute chart. Today's activity is right of the vertical. 414, once they got up there, they did have the reaction in the other direction. But what was it? Basically, it was a shallow pullback, and they ate some time off the clock and began to push higher. This is known as reading the tape. How about inside the numbers? There's good stuff in here today. We're going to learn some things. It's hump day, picking up where they left off yesterday. There was no real revelation waking up in the morning. We'll circle back to stocks on the move. Let's check out the early thoughts. This is how we set the table for the day. What's on my mind? What am I trying to transfer into your mind? Let's focus on what the chart is telling us and where the numbers are. The chart has been developing one of those bearish, flaggish kind of patterns. We talked about this before, but this is what Inside the Numbers members are getting first thing in the morning, 0 dark 30. In order for Mrs. Market to break that pattern, which points to things lower, that's the pattern it is, they would have to get over and above certain prices. SPY 413.93 is the spot, but we'll say getting to and above 414 would be a big win for the bulls. If said bearish pattern works out in the southern direction, we've got important numbers below yesterday's lows. They were discussed in last night's video, and we'll say the zone between 408 and a quarter and the gap around 406.50 would provide garden variety support. Now, in these type of cases, it's in the pre-market. We don't know what's going to happen. They're opening, or at least poised to open, maybe slightly down to flat. You have to give both sides. You have to be the umpire. We have to get to the game knowing the game plan, not caring which way they go. Either way, we have the game plan. On a more near-term, short basis, we'll be watching 412. Why? Because that's the closer spot the bulls need to recapture in order to make a run for the breakdown candle high and to get to the aforementioned 414 important spot. You got to think about this for a moment. Think about what the market did and how it did it, and then think about what Inside the Numbers members were reading long before the market even opened. It's called having the schematic, and we're moving along. Before the opening bell, I had another thought. We'll let them go for a while, but a test of yesterday's low around 410.59 is normal. They didn't do it, but it would have been normal. It is normal for them to do that. They were pretty close by. Getting below opens the door for the lower stuff. An aggressive trader buying yesterday's low would understand the risk, which is it doesn't hold. It's more of a gamble than a trade setup. For your information, why do I mention this? Because there could be buyers down there. We just don't know at this point. It's a high-risk price to take a trade right out of the gate. Now, we know the market turned around immediately in the morning and went up all day, but you don't know that in the pre-market. This was still in the pre-market. What I'm trying to do is give you all the information that I know to be stuff that happens in the market on a regular basis from all the years of experience of watching the tape every single day. About 9:30, like within seconds of the opening bell, nice trade on Roku. This is a teaser. We'll circle back to stocks on the move. So right out of the gate, they were floating around. When they move, they'll begin to create a storyline and opportunity, which obviously is what happened. Remember, if they can fight to get up and over 412, the bulls catch a break. A couple of minutes later, I decided to up the number 412 and a quarter. I had my reasons, didn't really matter. You know what happened. They went right through it for the most part. The door is open for the neighborhood of the high of the breakdown candle, 414, give or take. This is tour guide type information. Now here we're talking about a spike of 414 and the fact that if they reach on a straight shot, they'll likely have a reaction in the other direction. They didn't really reach on a straight shot, but they still had the reaction in the other direction. Now they're starting to eat time off the clock. This was before they actually got there, and what I was saying was they didn't get there on a straight shot. They're eating some time off the clock. They're going to get there one way or the other. The question is, do you really want to stick your neck out and short a bull market getting up to 414? And the answer is, for a scalp trade, they're likely going to have a reaction in the other direction. If 2, 3, 4 points isn't your cup of tea, then you take a pass. We're moving along. They were eating some time off the clock. You can pause the video and read the commentary. Double check the work. Double check everything that's said. Double check every number with the charts and what happened after the fact. At this point, they were just working their way up there. Now, let's focus in on this for a moment. 11:33 in the morning. As they continue to push higher, we should know what the prize is for today. Now, why am I saying that at 11:30? Because I'm reading the tape. I'm seeing that there's nothing bearish out there. There's no sellers around. They're going to push this thing up all day if they can. First, they would like to achieve 414.85 to 415. Should be another rest stop. About 414.85. Another rest stop, 414.85. They eat some time off the clock. They have a shallow pullback. That's called a rest stop. They got there at 12. We talked about it at 11:33. Let's move along. The prize is 416, give or take. Remember, back to 1133. After that, the magnetic force will draw price to 416, give or take. So now we're back after lunch and we're saying the prize is still 416. No change, they're doing the thing, 416, and you'll see the same thing repeated over and over and over again. So what I'll do here is just scroll up. You can pause the video and you can read the notes and double check the work on the charts. If you're looking to have somewhat of an angel on your shoulder, if you're active or would like to be active in trading the market, specifically the SPY, the leveraged exchange traded products that track the SPY, options on the SPY, or anything in that camp, this is somewhat of an angel on your shoulder. How about stocks on the move? Let's check out what happened there. We had a list. Today there were 6 on the board, and out of those 6, 3 hit their price objectives. Let's get over to the charts, see what happened. Nexera Energy, we put this one in the camp of shenanigans. So on the board was 77.70. Here, in this particular candle ending at 11:30 a.m., they make a low of 77.71. They bounce away. They come back and they make a low of 77.69, so they circle the number, and then they begin to try and grind upward. They run out of time at the end of the day, but that's not the point. This is shenanigans. They come up 1 penny short and then come in and do it. It goes in the book of not the situation we're looking for, but the number works, and that's really the takeaway. Now this one, BLDP, is in a different camp altogether. When this kind of stuff happens, it makes me madder than a junkyard dog. 1864, and the second number was 1815 on the board. The low of day is 18 and a quarter, so they never got to the second number, and here's the problem. The opening print is 1857, pennies below the entry, and then what happens? They rip it up all day long. About $1.40 higher than an 1864 would-be entry, but they opened below, left at the altar. The takeaway? The numbers work. Have no fear, we're going to finish on a strike. How about Roku? Getting creamed at the open, opening print, 341.62. Runs right down to 338.01, spikes it by a little bit, immediately reverses back in the other direction, rips higher, rocket ride. How you doing? Everybody's watching Netflix. We had Netflix on the board, but it had to get to my number. While everybody was paying attention to Netflix, we swooped in to Roku. What's going on over in Camp IWM? Big up day. This is a rising tide lifts all boats scenario. All the markets were up. So instead of the IWM falling into the abyss, and we told you that, below this low is the trouble area. So guess what? No wonder that they saved it long before they even run a test of that low just yet. We're back to the same place we were the other day where we're talking about an important spot. What was that spot? It was really getting above 224. Getting above 224 changes the trend back to the upside, at least on the daily chart. The other charts, the longer term charts, the trend is up. It's just way too far extended from home base. Extended from home base on the monthly chart, not the weekly, not the daily. The weekly, they just ran a test of home base. So here's what I'll say on the weekly chart. So they've held the 20-period moving average. Fair enough. They also have a breakup candle where the low is over here. So as long as they don't close below the low on a weekly close, then we could say that they're just eating time off the clock, building energy inside the breakup candle for another push higher. Why can't they be doing that from a weekly chart perspective? They can be. If something's going to change, it'll change first on a shorter term chart, morph onto the daily chart and beyond. In a weekly chart format, there's nothing wrong with this particular chart. What about the folks down at the transportation department? Is there anything wrong with this chart? Up another 1% today, there's nothing wrong with this chart. The transports continue to grind higher. Second favorite market leading indicator, a number one canary in the coal mine. There was never anything really wrong with the transports. What about the folks out in Silicon Valley? Well, they never came back to run a test of the 20-period moving average, but they had the same 2-day pullback that the SPY had, and being up near the old highs, they made a new high. There's nothing wrong here. They're just eating time off the clock going back and forth. That's all we need to know on a daily chart that looks like this. A down day or two is just a down day or two when you're trading at all-time highs until and unless the market shows you something different. When you see some kind of change in character, you see a sign or signal of a trend change. Those are different circumstances. A down day is just a down day, specifically when it's on less than the rolling average 90-day volume. You can't read anything into that because you don't have institutional participation, which means you don't have a trend change, you don't have conviction. All you have are some sellers that in those type of scenarios will be met with a new supply of buyers. A lot of these charts look the same. Here's the financials, the XLF. Nice big update today, up $1.25 in terms of percent. They ran a test of home base, spiked it today, reversal candle. Check this out. We do this all the time. In fact, we see this more often than not in the XLF. We see it all the time in the XLF. So a reversal candle, in this case, is classified as a candle that kind of paints over the other one. So we have an outside day today from yesterday. So today is an outside day against yesterday, finishing near the highs after spiking the lows. So check this out. So the high of yesterday's candle is $35.11. Where did we close today? How about $35.12? You know what comes next? Any accidents or coincidences across the market? No, of course not. They could have closed it at any number within pennies of that they wanted to. They chose $35.12. Therefore, it's on purpose. How about good old smash mouth? What's that 241.50? That was the number that was given out yesterday inside the numbers. There were some traders that bought that number. I don't know if they're still holding it, but nice rip away from that number. We went over the reason that the SMH stopped at that number, and it goes right back to something that we discuss all the time. The first thing is that markets love to come back and check in at former breakout and former breakdown areas. The second thing is that all charts act and react the same way. All this stuff is taught in the course, Lazy E-mini Trader. Some of you email me from time to time, can I cover gold? Sometimes I do, sometimes I forget. Today we'll cover gold, and here's a weekly chart. And there's a couple of things that I want to point out. A, gold's been under some pressure. Nobody really loves gold anymore. Nobody likes gold. Nobody wants to talk about gold. Just the diehard gold bugs, and that's fine. I get that. And each time somebody asks me about gold, I say the same thing. It's in a long-term uptrend. Even though it's been going down, for example, on the weekly chart, on the daily chart, still in a long-term uptrend. So let's talk about the short term. Let's talk about the long term. So on a short-term basis, where are they going? Why do I have a number on the screen at 169.75? Well, that's where I think they're going to run into some near-term resistance. They're going to have, if they get there sooner than later, somewhat of a way station. Here's a daily chart. It's not that far away from current price. But why do I say long-term uptrend even though it's going down and people look at me like I have three heads? Enter the monthly chart. This is what you use, either the weekly or the monthly, when you discuss long-term, or longer for that matter. There's other charts. There's semi-annual charts, there's quarterly charts, there's annual charts. But here's the situation. Do you see anything interesting on the monthly chart? Forget the trend line that's over here. It ran up and put in a top. Fair enough. Then it pulled back. Isn't that what's supposed to happen? That's what does happen. All of a sudden, they're turning again, and they turned on time. If you don't know what that means, you should take a look at the course, Lazy E-mini Trader. Those are the things, among others, that are taught in that course. All charts act and react the same way. Just for kicks, might as well look at silver too. Isn't silver just eating time off the clock, going back and forth in this range between 20 and let's just say 28? It's been doing it for a while. Soon, it'll be on time. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. Let's pull the ripcord here today. I'm David Frost. My strategic forecast, Thanks again for tuning in to another episode of Common Sense Market Analysis.